Y'all can hear me? Put a number 1 in the chat if y'all can hear me. If y'all can see the chat. All right, bet. So y'all can hear me. Let's get this cracking. Actually, I'm gonna turn the mics on since it's only a few of us. Waiting on, I think, 1 or 2 more people to hop in. I'm gonna wait. It's 5 minutes. So I'm gonna wait 5 minutes for the other 2 people. I don't want nobody to miss out. But we could talk amongst us. So, mute y'all. So how y'all doing today?
Very
Oh, it's
good.
good. It's a Sunday. Saturday. Oh, Saturday.
Yes, and feeling very blessed.
Good. All right. So while we here, let's introduce ourselves and what you get out of the whole little mastermind meeting we're gonna have today.
Nice.
Who
All
wants
right,
first?
I'll go first. My name is Latanya Nelson. I'm 28 years old, and pretty much like right now, I don't have a job, and I just been trying to figure out other ways to generate income other than just having a job and having that as my only income. So, but whether a job or not having a job, I want to have multiple streams of income pretty much. And I've always been interested in trying to figure out how to invest in stocks because being able to make money and while you sleep is a good, I
Yeah,
feel like it's a good feeling.
definitely.
Yeah.
So
But
I'm glad you
yeah.
tapped in because I have a knack for just being able to talk to people, get to find out their passion, and then introduce them to a play that will actually get them into a position where they would be their own boss, their own entrepreneur. They won't need a job.
Yeah.
And I've done it with a few people, and like my protege Jose, he's 20. I think he just turned 24. You done bought him a Corvette last year. He's making $100,000. He's doing his own thing. And he's my protege, but he done taught me some things. So he's taught me how to build my credit up and get in a position. So and all of that counts. So I'm gonna be teaching all of that. Plus, I'm gonna be introducing y'all to the stocks. I'm gonna introduce you to the real estate. I'm gonna introduce you to, and in order to introduce you to the real estate, I gotta introduce you to the credit because you're gonna have to have your
Right.
credit right for that. So I'm gonna introduce you to all of these different things that you guys can start working on without having to pay somebody, because it's a lot of people offering different services, and that's all fine and dandy, but if you a lot of this stuff you could do for yourself, and if you're unemployed you got plenty of time to get this stuff done, and it's not really even hard. It's just actually knowing how easy the play is in the first place. So Priscilla, how are you?
I'm good. I'm good. I do have a job. I'm working, but I'm at the point now. I want freedom. I'm getting older. I have a family to support, and I hate always having to, you know, have a certain type of demeanor for my job. So you won't. It's like I feel like you're walking on eggshells all the time. I want to
All
just
right,
be able to be free. You know what I mean?
facts. So you got kids?
Nah. Mm-mm.
Okay. All right. Just trying to figure out. Because the whole reason I got into investing, I got 5 kids and I'm an entrepreneur. And when you get into the entrepreneurship lifestyle, you don't have a 401k plan getting fed, and you don't got all of these different plans getting fed. So it's like um when you get into things, you gotta have an exit plan. You dig what I'm saying? Unless you plan on being a slave, and
Yeah.
you're gonna be doing it for the rest of your life, not knowing when you're gonna be able to get yourself out of that position. You know what I'm saying? So that's when I was like, all right, investing gonna be my exit plan. You dig what I'm saying? Let me fix my camera. Investing is gonna be my exit plan into when I decide I want to get out of running a store. So that's when I started looking into other things, like trying to figure out what's a good investment. I knew real estate was always a good investment, but I wasn't in a position, or I thought I wasn't in a position to actually go out and acquire that fast. And you know how it is, you trying to do something fast. You want to get to that bag fast. So it's like, all right, well, that's gonna take maybe 2 or 3 years to build myself up to look good on paper for somebody to even allow me to purchase a home. So I learned that it don't take that long. You need to get this done in months. So I'm gonna get started. So has anybody ever purchased stock? Oh,
Yeah, I purchased stock before.
let me let Eddie in the room. He just waiting in the waiting room. All right, bow. Eddie, I'm gonna let him introduce himself too. You said, Priscilla, you said you had purchased stock.
Yeah, I had purchased stock. I was messing with Robinhood until they started acting crazy, and I was just trying to figure out which platform to use next.
Okay, so what is your goal when you're purchasing stock? Are you
Something that's
purchasing it just
gonna
for the quick? You trying to just get some quick, like just see some quick profits, or you looking for a long-term play, like for
yeah,
like a retirement play?
yeah, like a long term investment. You know, like people who purchased Amazon stocks and Apple back in the day. I'm trying to get on something like that.
All right, cool. So I'm at Robinhood ain't bad for that. It is and it ain't bad for that. Is what you don't want to purchase on Robinhood is cryptocurrency. You know what I'm saying? Because cryptocurrency is a whole nother asset class, and it actually the whole purpose of cryptocurrency is to require proof of stake. Let me see, Eddie. Let me mute him real quick, and then Eddie, I'm gonna bring you up in a second. But the whole purpose of cryptocurrency is is like proof of stake. So the way that thing works is it's a decentralized system. The whole goal was to get away from the centralized system, which was the government, and you know what I'm saying, and them being able to inflate the dollar whenever they decide they want to. So the decentralized system takes the power away from everybody and put it into actual technology. So you got people that are like Bitcoin miners. And what they do is they got supercomputers and they got them built up all in like rooms. Some of them by warehouses, and you might have seen pictures of them with fans and shit going everywhere. And these miners, these computers that are basically on a network called the blockchain. And what they're doing is witnessing these transactions. So if you decide to purchase cryptocurrency from Coinbase, then it has to verify itself like 7 times or so. It has to be 7 different computers on that network to verify that purchase in order for that purchase to actually be real. When you do it on Robinhood, you're not going through it. It's more like you're buying borrowed cryptocurrency that they already purchased. But if they don't have enough cryptocurrency to back everybody that's purchasing it from them, when the market crashes, then people end up fucked over. So that's the whole thing with cryptocurrency. But with stocks, it's a little different. Um, so you can purchase stocks through Robinhood, through Cash App, which I do. I like Cash App, to be honest, because you could buy portions of the stock. So like a lot of people don't got 3 bands to get in Apple. I mean not Apple, Amazon, but you could buy $100 worth of Amazon and ride the wave with everybody else. You just riding a smaller. You riding that 10% of whatever you purchased or whatever the percentage is. You riding that way. Eddie, I'm gonna bring you up. Introduce yourself. I know who you are, but you know what I'm saying. Introduce yourself to the room, and also what you plan to get out of the session today. Because I got a 30-something page PowerPoint that I don't want to keep y'all too long on. You know what I'm saying? So if I could just get straight to what y'all looking to know and spend more time on those things, then you know what I'm saying? Because it's a lot. It's a lot. Um, so I'm gonna bring Eddie up. What's
All
up?
right, so What's going on, everybody? So yeah, I'm 32. I live in North Carolina. I run a meal prep delivery service. I've been doing that since like 2015. I also have like some clothes. I'm coming out with some other products, but basically, what I'm trying to get out of this is, I mean, I've worked. Um, haven't really focused on the credit, but running a business, you have to get serious about your credit. I've accumulated, a decent amount of cash,
Mhm.
but just having a bunch of cash is pointless. So I just really want to just figure out how I can just move it somewhere, keep it circulating, just really get into the investment game. So that's really what just brought me on, just to get general knowledge of
Okay.
how the whole thing works.
Have you ever bought stocks before?
I have, just like you said, like Cash App. Once I saw Cash App like started offering it,
Mm,
I just played around with it, especially like when COVID first started, and I saw how Amazon especially was taking off. I just kind of threw a couple dollars in there, but I still never had. I mean, I've looked at 100 videos, YouTube, Google, but just being able to talk to somebody one on one, that's
right, right.
a different
And
type. You know what I mean?
okay, yeah. Okay. So definitely what I'm gonna give y'all today is gonna be we're gonna start with credit first. I normally don't start with credit first, but we're gonna start with credit first because it's actually that simple. Um, so then we're gonna move on to some stocks, and I'm gonna talk about dividends, and I'm gonna give y'all an actual strategy that you can use to buy your freedom back, as far as like buying stocks and getting the dividend payouts and actually using the dividend payouts to pay bills. So like for example, say you got an AT&T, you pay AT&T $100 a month for your cell phone. You could actually invest. AT&T is a company that pays dividends. So and I'll explain dividends if y'all don't know dividends, but the dividends is basically like an annual payout that they give to their investors off of the profits they made for whatever that annual period might be, whether it's a month or a quarter or a year. They'll pay it out by how much you have in holdings. And then with that, like if you got high yielding dividend stocks like 5%, some of them pay up to 10%. You could actually sit and do the math and figure out how much of that stock you need to acquire for them to pay you the dividends, for you to use those dividends to pay your cell phone bill. Now you own stock and that stock is going to acquire wealth over time, and then it's actually paying a bill so that you don't have to pay it. So did that make sense? Everybody just drop a one in the comments if that makes sense. So that's one of the plays I'm gonna show y'all. But first we're going to talk about credit, because credit is very easy to fix. So, and in order to acquire and some form of a loan or some form of bond or anything, you're gonna need some type of decent credit. So one of the apps that I found to actually build my credit, and I'm gonna put it in the message box, is called Self. You can download this app on Apple or Android. And what the app does, and I was skeptical about it at first because I was like, this shit I don't hear too many people talking about it. But I've literally taken my score up using a joint in a matter of like 6 months. I'm sitting on like a 750 credit score, and I'm in the process of using that credit score to purchase rental property. And I'm gonna show y'all that play as well on how to do that. And I did this in a matter of 6 months. I went from, I wouldn't say poor, I was at like fair credit, um, to like a good credit score to actually get funded for whatever I want and actually not be paying these high interest rates, because that's the whole goal of good credit, is to not pay the high interest rates. So what the app self does is you set up an account, and you're basically loaning yourself money as you're your own creditor. So, and it's hard to kind of not pay it. So what they do is they'll link up with your bank account, and you can tell them how much money you want to give them a month. And it's almost like you're paying a loan off, but you're not really paying a loan off. You're just basically putting a account together of some money that you'll be able to get back when the time period is over. But it's reporting to the credit bureaus as a loan. Do that make sense, y'all? Let me know if y'all with me.
Yeah, it sounds like kind of like a secure credit card, like
Yeah,
that.
it's like a secure credit card, but it's reporting like a loan, and it's reporting like a loan, and it's building up your credit. Now, on top of that, if you got some delinquencies, I'm gonna give y'all a slick little play that we use to get those off your credit as well, because you want to get those off before you start doing the self joint, just so you got a clean slate. So what you want to do is dispute everything on your credit, whether it was legit or not. You want to just dispute it, because the companies have 30 days in order to remove it. Now, what you do is you mail it in and you post date it for 2 weeks before you actually sent the letter off, when you do the dispute letter. Now that just cut their time down into 2 weeks that they gotta actually um, reply back. So you just actually cut the time down by post dating the letter. It's a computer that's doing all of the letters.
Right.
The computers is reading the letters. So now they got 2 weeks, and the computer is not gonna get your letter done in 2 weeks, flat out. You dig what I'm saying? So then you send another letter, post date that for 2 more weeks, letting them know that it's been 4 weeks, and boom, 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 woo, 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 they had that pulled off. You'll get, I would say, at least 90% of your your delinquencies on your credit report pulled off your credit report. Now it's time to build your credit, and that's when you go to the self joint, because like I said, your score is still going to be low. You might pull up 40, 50 points, but if you're in the 500s and you pull up 40, 50 points, you're still in like a 600. So you want to get yourself into the 700s. You're going to have to start getting credit. And in order to get the credit, it's going to be hard to get it without paying super high interest rates and getting yourself back into debt. So the self lending app is probably one of the safest and best ways to do it, because you can pick how much you want to pay. They'll tell you how long the term is, and then you can just do automatic deductions, whether it's $25 a month out your account, $50 a month out your account. Let them just automatically pull it out your account. And then once you accumulate a certain amount, they give you an actual credit card that you can use, and you're basically spending the money that you already gave them. You prepaid them already. So like you said, it's a secure credit card, and it helps you build your credit up. So did everybody kind of catch on with that?
Yes.
All right, cool.
Yep.
I'm gonna start the PowerPoint up. Let me get this. So we're just gonna do like an introduction to investing. So like I said, the reason I started investing in the stock market and the crypto market and the real estate market was because I acquired a certain amount of money that was just sitting in a bank, and I felt like I could do better than just saving money and putting it in a bank. So I is recommended to refocus your goals from saving to investing that money. So that's what I started to do. Let's see. So what is investing? It's the purchase of assets with the goal of increasing future income. It focuses on wealth accumulation, and it's appropriate for your long-term goals. So, your long-term goal, it could be buying a house. Like mine is retiring. So, I'm trying to accumulate. I'm trying to take the money that instead of putting it in a savings account, which will prolong my retirement, I'm putting it in investments to kind of speed up my retirement. So that's the purpose of my investment. Here's some terms that you'll hear, and it's good to know the terminology. So you got rate of return, which is the total return on the investment. It's expressed as a percentage of the amount of money invested. So And then we put the formula here is basically your total return. So like if you took in XYZ amount, you divide that by the amount of money invested, and then that'll give you the percentage of your rate of return. So I got an example here. If Mandy saved $2,200 in a money market deposit account, and after 1 year, she had a return of $110. What is Mandy's rate of return? So you take the 110 that she made, you divide that by what she invested, and she made 5%. On her return on her investment is 5%. And the reason this is important is because you want to know what's a good return on an investment. Is 5% a good return? Is 10% a good return? Is 15, 20% a good return? And it all depends on what you're doing. Annually, if your stocks aren't bringing you in at least 30% annually, then probably time to let those stocks go. So 30% is my number. If I could take $10,000 and put it in to stocks, or $1,000 and put it in the stocks, and all I'm looking to make is at least $300 off that $1,000. You dig what I'm saying? So, and if I was putting in $10,000, I'm looking to make $3,000 off that $10,000. And the reason is, it don't sound like a lot. It might not sound like a lot, but if you do the math, put that money in a bank account and see how much money you got at the end of the year. It's not gonna be but pennies to the dollar of what you actually, you know what I'm saying, hoping for. So it's a better move to invest the money. And then there's different moves that's gonna pay out higher returns. And like I said, and you'll learn this in later on in the slideshow about the higher risk, the higher the return, the lower the risk. So it's all, but in a long-term play, you want to take low risk. You don't want to take high risk because you can lose it all fast. So if you in it for 10, 15 years, if you cool with, allowing that to build up, and it's going to compound, and I'm going to teach y'all that how parlaying or leaving that money in or putting money in on a periodic basis and letting it build, it's going to actually speed up the process of you accumulating six figures and in savings and in assets. So we did another example. What is Derek's rate of return? Derek invested $900. When he withdrew his money from the investment, he had a total of $1,050. What is Derek's rate of return? So he made $150 divided by 900. He ended up with a 16.7% return. So all you basically doing is moving a decimal point off the numbers that you come up with in the equation. And like I said, the higher the risk equals the potential higher return. And the risk is basically the uncertainty regarding the outcome of the situation. So when you're making investment choices, whether it's the stock market, whether it's crypto, whether it's real estate, you want to look at the risk that you're taking. You definitely don't want to just go with uncalculated decisions based off of emotions. So because you might end up on the back end of the play, and by that time it's over with. So you definitely want to do your research. Just don't be jumping into things. If you have the money to play with, and you do got a percentage of your savings that you want to do calculated risk, and then you got something you want to do, you want to go hard with, I do recommend that if you got the money to do it. But if you don't have the money to do it, kind of build your capital by taking lower risk investments. So, and where I go. Investment risk: possibility that an investment will fail to pay the expected return or fail to pay a return at all. All investment tools carry some level of risk. So that's the only difference between putting your money in the bank and actually investing it, is you are taking a risk. But the plays that I'm gonna show y'all today, they are very low risk. So they're more for like long term. They're not for the fast pace. I do have one play that is going to be for fast pace, which is the crypto market. But that market comes and goes, and so it's not really that fast paced. It's just that in 2021, that market is a fast paced money getter. So I'm gonna introduce y'all to that if you haven't, because I've heard a lot of people say they bought stocks but not crypto. So I'm gonna teach y'all how to get some crypto. Um, Inflation, the rise in general level of prices. Inflation risk, the danger that money won't be worth as much in the future as it is today. So as y'all been seeing, and this is going to break. Let me go back to the camera. So have y'all been paying attention what's been going on in the world the past year and a half with the pandemic? We've been super inflating the US dollar by stimulus checks. And I'm not against the stimulus checks, but I know how to play the money market based on how the money is flowing. So when these stimmy checks come out, the first stimmy check sparked the Bitcoin wave. This second, or this would actually be like the third or fourth Bitcoin wave. Bitcoin's had a few waves since like 2012 or 2014. Whenever it got started, it's had like every, I would say 3 to 4 years, it have like a super wave where people throw money into it and motherfuckers get rich. This is one of them years, and if you want to get your feet wet, this will be a year to get your feet wet. But don't do what I've seen a lot of people, the greedy folks, throw their whole entire savings account in. Some people actually end up winning, but it's gonna be a lot of losers that do that because of the timing of the market. I've had a friend that actually threw in 5,000 on Doge when the market, when the hype was going up, and she got very emotional. She was up. Her 5,000 took her to like 7,500 within a very quick period of time, and then it got quiet for a little bit, and Doge started to correct itself. And she got emotional because she seen the profits go away, and then her 5,000 was now like 2,500, and she thought she was gonna lose it all, so she took it all out. Then about 2 or 3 weeks later, Doge like triples whatever it was when she was up to 7,500. So she could have really made some money, but she was emotional. She didn't think about the risk when she first jumped in, and she didn't have a plan, and she ended up losing 25. She lost half of her investment. So the crypto market it's a very fast-paced market, and you could lose or you could win a lot of money. You can't be an emotional investor. You have to know that you're in it for the long play, and that's how you win for real, for real. You can't lose when you in the long play. When you in it for the like, all right, I need to pull this 1,000 out real quick, you're losing your position. So you definitely don't want to move that way. I'm gonna go back to the PowerPoint real quick. So you got 6 different types of investments. You got stocks, you got bonds, you got mutual funds, you got index funds, real estate, and then you have speculative investments. And I'm gonna explain them all. So you guys already know about stocks. You bought stocks on Robinhood. So basically, when you purchase a stock, you are purchasing a share of ownership in a company. With purchasing that, you get rights to voting on I don't know if y'all be seeing the emails when you purchase some stocks on Robinhood, and those quarterly meetings come around and they're voting on the next CEO or the next CFO or something like that. But you actually, no matter if you only got 1 share or you got 100 shares, you got a seat at the table. You're an owner of that stock. You're a shareholder. So that in itself is powerful for us as Black people, in my opinion, because we don't own shit. Like we grew up not owning. Like my parents didn't own nothing. They didn't. I mean, well, my mom owned a house, but she wasn't into owning things. She didn't want to own a business. She didn't want to own stocks. She didn't want to invest in things. Back then, the hot thing was bonds, and she had like this check that she bought, like $50, and was like, "That's a bond check," and she showed it to me, like, "Yeah, when you turn 18, it's gonna be worth something." But the game has changed now from the bonds. So a lot of people don't buy bonds no more, but I'll explain bonds as well. Um, so I'm gonna explain dividends and I'm gonna explain this play. I kind of like talked about it, but we had like a new person just popped up. So we're gonna talk about this play with the dividends again. But dividends is basically the share of profits distributed and cash to the stockholders. Um, uh, Stockholders may or may not receive dividends. It just depends on the company. So you can do your research, go on Google, and just type in companies that pay out dividends. You don't really even have to like the company if you really just want to make money off the dividends. But it makes sense if you, like I said, if you paying Sprint or AT&T and they're paying out dividends to actually buy enough of their stock so that the dividends will pay the bill. So and you can sit there and figure out the math. Each one will have different payouts and they'll have different schedules on when they paying them out. But you can go on the websites and find out all of that information. The market price is basically the current price that a buyer is willing to pay for stock. So when you go on Robinhood, where you go now, Cash App, I think they just enabled it to where you can now pick the price, which that was one of the features I didn't like about it, but I was long-term player, so it didn't really matter. I was just buying at whatever price, but now they've enabled it to where if you have chart reading capabilities, or if you just know that it's been trading up and down and you know where the down is, then you can actually pick that price and buy into that price, which will kind of up your profitable status. And if you got a knack for it or a skill for it, then you can actually start timing the market and throwing your money in on the dips. That's the terminology a lot of the investors use, is buy the dips. It's basically you want to get in when it's at its lowest. That's the best way to get in is when the price is at its lowest and not when it's at its highest. And that's why buying in the crypto market is so risky right now, is because the crypto market is at an all-time high. Every day is breaking records. So at any day that it crashed, it's going to be detrimental. It's one of those risky plays, but I would definitely say get into it because it's still in the earliest stages of an adaptation as far as the world is concerned, and different countries and different people are still getting introduced to it. So like I said, if you're in it for the long term, you're not going to lose. But if you're in it just for the quick buck, it's very risky. It's very risky. If you need to pull your money out tomorrow to do something, then you might be pulling out on a bad day. So it's very risky. But like I said, you if you get on the right exchanges, Robinhood allows you to, Webull allows you to, you can pick your limit price. So you don't have to buy in at market price. You can pick the price that you want to buy in at. And you just have to be patient. If you're anxious, and it's really all about patience too. Like I said, you can't be in a rush to get this money. You have to be strategic about it at all times. So you want to take your time, be patient, and study where the price points have been playing with. Watch the news on these different stocks. Pull up articles and see what the CEO is actually doing. Like I know y'all know I'm investing in Microsoft, and as y'all know, Bill Gates has just divorced Melinda Gates. So I'm kind of anxious to see what's going to happen with the stock price. But because all of those things affect the stock price. Elon Musk, he's going on Saturday Night Live tonight. He is a big advocate for the Dogecoin, but he also owns his own company that's on the stock market as well. So all of these things can actually affect the price. So you want to kind of follow these CEOs to see how their leadership can be affected. Like if a man is going through a divorce, his leadership might be affected. So we don't know how Microsoft might go. So Microsoft might take a dip. It might be a good time to buy because he can build that back up. So those are the strategies that you want to kind of start getting your mind wrapped around when you're jumping into stocks, and not just listening to your friends who was like, yo, bro, I just made a rack of money off Tesla. Because I know a rack of people that make money off Tesla, and then past month and a half, shit, Tesla's been tanking and it's been trying to build itself back up. So, like I said, if you're not strategic about it, you can lose money, or you could start in the red and then just prolong your process of getting into the green. you want to kind of get in at a good number, so where you're just in the green, you know what I mean? So bonds. All right, so bonds is basically the form of lending to a company or the government, city, state, or federal. And then they pay out an annual interest is paid to the investor. Once the maturity date is reached, the principal is repaid to the bondholder. So like I said, my mom purchased me $50 bonds when I was born, and you couldn't really do nothing to them to the maturity date, and then they pay you out. But these are old school ways of doing things, and also I only feel like these are for a certain class of people. I don't see a lot of our people doing the bonds, so I'm not gonna spend much time talking about bonds unless you guys have. Let me get back to the chat and see if anybody has any questions. Y'all got all right. When you get a chance, can you go into detail on how to post date the mail? All right. So, like I said, you post date. I'm glad you asked that question too, because I don't want to get too far ahead. So when you're post dating a letter, because like I said, a computer is reading these letters and not a person. So even though that when you take it to the post office and they stamp it with that date, the computer ain't reading the envelope. They're reading your actual letter. So you want to make sure that your letter is post dated 2 weeks ahead of time, so that when you're trying to get these things taken off of your credit, that you're cutting down their time. It's just a strategic play. You know what I mean? So when you post date that letter, it goes in like a machine will go over top of it and read your letter. And then it'll decide, if it's going to take it off of your credit or not. But a lot of times, if it doesn't meet the 30-day joint and your letter is proof, and then you send a second letter 2 weeks later, letting them know that you already have sent it, you post date that joint too, they're going to end up removing it off your credit. Anybody else got any other questions before I move on? We like halfway through. So you post dated 2 weeks behind. So like, what's today? All right, so like say today was the 15th. If today was the 15th, you just take it back to like the 2nd, and you put that date on your letter, and then you mail it off on the 15th. By the time they get it, it might be 2 or 3 days later. They only got a week and a half to reply to your letter. So by the time the computer reads the joint, it's gonna see that it ain't get to you in time. It's gonna automatically take you out. But if it don't, then you send a second follow-up letter just to tell it like, yo, y'all didn't reply in 30 days, remove that off my credit. Wow, case closed. Now you got your credit cleaned up. Now you just want to build it up by using different platforms, different safe platforms that's going to allow you to, you know what I'm saying, build your credit without you actually creating debt. You know what I mean? With these high percentages that they, these companies will bust you with. Any other questions? All right, bet. So everything's making sense. Y'all let me know if I'm on point.
Yeah, there's some good stuff right here.
All right. I'm dropping some gems. Y'all let me know. All right, bet. So let's get back to the PowerPoint. I'm gonna skip bonds. Like I said, bonds ain't really something I would advise y'all to invest in, because it's such a low payout and such a long time on the maturity date. It's not worth doing, in my opinion. But if you just got the money and you trying to defer taxes, which I'm gonna get into as well, how to like defer money in different places so that you're not paying as much in taxes at the end of the year, then it may be a play that you can move. But if you really trying to retire, you're not gonna retire off investing in bonds. Mutual funds. So mutual funds is when a company combines the funds of many different investors and then invest that money in a diversified portfolio of stocks and bonds. So mutual funds and ETFs, I call them the AKA lazy investors. And the reason why is because they do all of the work for you. You know, they pick the companies, you invest in that mutual fund, and then they do all the work. So the advantage is it reduces the investment risk, because like I said, you got a professional doing the investments for you, and it also saves you time. The disadvantage is when you decide to cash out, the fees may be high because you got to pay these people for the work they're doing. So mutual funds, like I said, is for the lazy investors. If you don't feel like doing the math or sitting and looking at companies and following the articles about Bill Gates and about Elon Musk and all of that, you want a company that does it, then you can invest in mutual funds. Same with the index fund. The index fund is basically the easy route of investing in indexes, which you have different groupings. So these are not really like stocks, that they call them indexes. So like you see Index P, NASDAQ, S&P. These are groups of stocks and bonds, and you can invest in those as well. So it'll just be a comprised of a variety of businesses in a certain market. Whereas the ETFs is like groupings of business in a niche. So the index is basically like certain markets. So they got tiers. You got large cap companies, mid cap, and small cap companies. And so like you got the big boys, those would be in I forgot which one it is. I think it's the NASDAQ or something like that. But the S&P is for like the standard Poor 500. So those are like the lower cap companies, and they just going off the market cap or the worth of these companies. The smaller cap companies are more volatile. I don't know if y'all know what volatile is, but volatile is just basically risky. They're more risky. The less volatile ones would be the larger cap companies like Amazon, Tesla. Those big companies, they're not as risky to invest in because who's going to come tomorrow and wipe out Amazon? Who's going to come wipe out Coca-Cola? These companies been around for forever. They've created brands on top of brands. Those companies, you know what I mean? They're less volatile, they're less risky. But like I said, the less risk, the less reward. You don't make as much money off of them as you could a small cap company like the penny stocks, the weed stocks. Those companies, they have actual groupings, like ETF groupings of just weed stock companies and tech companies. And so you could get into there and you're basically investing in all of these companies at one time when you purchase these ETFs. So that's the reward of it. And so like if one company is losing in the ETF, like say you got a tech ETF and you got Microsoft, Apple, they got all of these companies in this one ETF and they purchase it, they'll have a percentage of each one of these companies. So like this one group of ETFs might be 10% Apple, 25% Windows, another tech company, whoopie woo woo. And as these tech companies stock price, they kind of balance each other out. So if one is dropping and one is winning, it'll balance itself out so that it's like a hedge almost, so that you don't lose money. So let me see if y'all got any questions about that, because I know that's kind of confusing to understand. Anybody got any questions about the ETFs, the index funds, large cap, mid cap, small cap, any of that? All right, no questions. Let's keep it moving. All right. So, how to find a good stock? What these are my personal tips and recommendations for how to find a good stock. Look for who dominates their market. So I'm gonna unmute everybody just to ask some questions, like a little test, just to see what y'all know about the market and get everybody awake. So everybody look at your screens and unmute. So like, all right, Coke versus Pepsi. I see Eddie, Latanya, Priscilla is unmuted, Beverly, you not unmuted. Who would dominate the market, y'all, between Coke and Pepsi? I want to hear y'all answer before I give y'all the real answer.
I want to. Oh, go ahead.
Oh no,
you're
fine. Go ahead.
Pepsi, I'm guessing.
When it comes to the beverage game, who you think would be the better play? The Coke? They both been around for forever. So they both good plays, but if you was to pick between the two, who you think dominates the beverage market between the two?
I think Coke.
Coke, but I would really say Pepsi. Like the main choice would be Coke because it's more
But
popular.
you gotta think about it. Coke sell other stuff other than sodas. Don't they do like energy drinks and
Pepsi,
vitamin water and stuff?
Pepsi do too though.
Yeah,
Yeah,
they
but I
both
think Coke. I think they more popular. Though.
they're more popular thing, but it's not always a popularity contest. And I think Pepsi, honestly.
All right,
Yeah.
anybody that said Pepsi was wrong, I'll tell you why. When you go to a damn restaurant, they be like, would you like a Coke? They aren't referring to the actual brand of the soda. They're actually just referring to the word soda. Am I correct?
Yeah.
All
Yeah.
right.
Mhm.
So that word Coke is synonymous with just soda, period. So the fact that they was able to take their brand and make it synonymous with the whole market of drinks. Because when you show up, they be like, yo, you want a Coke? And then they'll ask you what flavor you want or whatever. But it's always like Coke is just synonymous with the market of soft drinks. So Coke is the dominant one. I'm gonna give y'all another one, and this one's super easy. When you
So
think about,
popular
go
a
ahead, go
popular
ahead,
contest then.
go ahead. No, I want to hear.
It is based off a popularity contest then. That's what I'm assuming.
Well, no, it's just the fact that their brand dominated the actual market by actually like the next one is going to make you understand it even more. When you think about the
Okay.
shirts, right, with the collars on them, what are they called, right?
Hold on.
For polos?
Yeah. So who dominate that market?
Oh yeah.
Yeah.
You see what I'm trying to say? Now Lacoste make them jumps, Hugo Boss
Right.
make them, everybody makes them, but it's a company that actually got the name. And we call them Jones Polos now. We call them shirts polos. They was probably called collared, 3-button collared shirts or something. But we ended up making that name synonymous. So that's the mindset you want to have when you picking your stocks. Y'all get what I'm saying though?
Yeah.
Yeah.
You want to
Yeah.
have that mindset. It's like, because it's a long-term play. Who gonna knock Polo off? Lacoste not gonna knock them off. Nobody can stop them from making them shirts with the little horses on them. Them jumps sell everywhere, from Marshalls, Ross to Macy's to they got the market on smash. You know what I'm saying? And then if you watch the US Open, they got it on smash there. They got the high-end people wearing it in the tennis markets. So you gotta look at the market and how they are moving, and they got that market on smash. All right, we get back to the PowerPoint, but I just wanted to kind of get y'all involved and see where your mindset was at. But Pepsi ain't a bad investment, but because Pepsi actually has more soft drinks than Coke, but Coke is the dominant name. Like that's the name that come out everybody's mouth, and everybody recognizes that name. So across the world. So for soft drinks, not just in the US, but across the world, you can go out the country and you want a Coke? Yes. You know what I'm saying? So it's crazy. They dominated that, John. They got it on space. Let me get back to the PowerPoint. All right. So we're gonna get into real estate. This is one of my favorites. So y'all been taking notes, or y'all just been listening?
I've been
Yeah.
taking notes.
Yeah, definitely taking notes.
All right, and I recorded this too, so I'm gonna be able to share this with y'all later. This one right here, y'all definitely, if you want to get into the real estate play, y'all definitely want to pay attention to this. So any residential or commercial property or land, as well as the rights accompanying that land, a family home is usually not considered an investment asset and can be risky and more time consuming, but has potential for large returns. And we just put that in there because family homes, you're gonna stay in it a long time. You're not really, nobody's paying you rent, so it's not like really an investment asset. But long term, the market, they not making more land. So and 30 years from now, it's going to be more people and less land. The market is going to end up going up for your home. So 9 times out of 10, if you stick with your real estate, you can make money off of it. But If you buy a home and you decide to get out of it in 4 or 5 years, 9 times out of 10, you can lose money, but you can make money with real estate as well. And I'm gonna teach y'all a play before I move to the speculative investments that I do not recommend unless you had your feet in the water for a while. So this the strategy right here. You can do Airbnb, or you can buy property and rent it out for tenants. When you buy a property, you're building you're acquiring an asset. Two, you're putting equity into that asset every time you make a payment. And then the goal is, like I said, you can decide to move out or sell that property within a certain span of years. Like I said, have an exit strategy. Don't just buy stuff and don't know what you want to do with it. What's your goal? Like you said, if you planning to retire, the real estate game will accelerate that for you in super amount of time, because the market is, it changes just about every 4 or 5 years. It seems like every time a president changes, the market is changing as well. So real estate can actually get you rich and retire you. So ways to acquire real estate and not have to foot the bill, because like we said, I forgot, I think it was Latanya who said that she's looking for ways to make money. So one way to make money, this is a good play to make money while you're not working, is to try to acquire Airbnb. But in order to do so, like I said, you gotta get your credit up. You gotta make sure your credit is in line. Two, you can acquire these by buying, leasing, or just being a good talker and negotiator. You do not have to own property to actually do Airbnb. The property managers and property owners, if they feel comfortable with you, if you know what you're talking about when you're going in and talking to these people, they will allow you to try to mute your let me see if I can mute you. They will allow you to be in charge of their property. And I'm gonna tell you why. Reason why is because Airbnb will actually keep their property in a better condition than them renting out to tenants. And I'm gonna tell you why. Airbnb is the equivalent of like being in the hotel industry. So anytime you rent a room from the hotel or Airbnb, when you leave, somebody has to come in and clean that room. When you got tenants in your house, they treat it like it's their house, and they end up fucking shit up, dogging your house out, and you end up spending more on repairs. When you got people that's just visiting an area and just for a short period of time, a lot of times they don't even spend time in your property. They just need a place to lay their head at night. So it's actually a better play when you're buying investment properties to do Airbnb than to actually try to go out here and find a tenant that's going to stay in there for a few years. It sounds easier to get the tenant because once you got them in there, you got somebody locked in that's going to pay you every month. But it is easier to do it that way, but the profits in the Airbnb is going to make way more sense because, and I'm going to give you the play. So it's a website. Let me see if I can pull it up and log into my joint real quick. I'm going to log into my account. This one right here, like I said, y'all going to want to take notes on this one. This site is called mashvisor.com. You can get a 7-day free trial. I'm about to log into my account and let y'all see how I use this to find properties and Airbnb and find out what properties are good properties. Because just buying a property is one thing, but making sure you're in a good area and a profitable area is another thing. Hopefully I can remember my password. Shit. I'll be forgetting all my passwords. That ain't it. So that's it. Oh, that ain't it. Y'all bear with me while I try to log in, because this one right here. All right, is it? I'm in, I think, strong spinning. Yeah. Try this again. I just want to spin it. Email registered. Google, Facebook, Google login. Okay. Want me to log in with my Google account? No. No, it's good. All right, I'm in. Let me do the screen share. All right, so this is mashvisor.com. Y'all, everybody can see this?
Yeah.
All right, so this the play right here, y'all. You want to get on here. If you plan on wanting to do the Airbnb business, you can make on average about $2,000 to $3,000 a month, depending on what market. I mean, how many properties you have, one, where your properties are located, and what you got as far as overhead. Your overhead costs is always going to determine your market. So in this DMV area, it's the best market, in my opinion. That if you just starting out, Baltimore is a very good market for Airbnb because you have the whole inner harbor here. So let me get over here. So the way this app works is basically a tool that collects data. And what this tool does is it collects data on the real estate market. And it'll let you know what's a good buy, what's a bad buy, as far as the areas and what other rental investors are making. So you can get all this information, and you want to do this research before you just jump into anything, like I said. So if you plan on doing investment properties, you got this tab right here that shows you all the numbers for investment properties, but we're going to click on Airbnb, and then it shows you hot zones on the map. And as you see right here in the inner harbor of Baltimore, that's the hot zone. You can see how many properties, because you definitely want to be where people are actually renting Airbnbs. You don't want to be in an area where people aren't renting Airbnbs, because then you might not get your shit rented out. So you want to get in the harbor, and then once you click down there, you can start seeing other hot zones like the little pockets and sections. And then on the right hand side, it's giving you the numbers. And basically, anybody that's renting an Airbnb and you're getting your joint occupied 90% of the month, you're making a good amount of money. Anything that's only getting occupied 14% of the month or 34% of the month, you're not going to make as much. And you can see it reflects here where it says the rental estimated rental income. So this thing gives you all the tools you need that if you wanted to set up an Airbnb business today, you could set it up. I'm trying to empower you to see your potential. So you get on this joint and you can start mapping out your future right away. Some of these places are going to be apartments. Some of these places are going to be houses. You just want to find the hotspot area. So your first, this is a 7-step process. So step number one, if y'all taking notes, the step number one is to analyze the market for profitability. And you do that by using the Mashvisor website. So you go on the Mashvisor website, you start typing in the areas where you want to have your Airbnb business start. So you go on here, you find these hot zones, you find an area, then you see if that area is actually a good performance area. So like, I'm gonna just click on this one, got 975 properties in this area. So now you got 76 homes found right here. This area looks good. As you can see, all the homes in this area of the map, they're doing at least 60. Most of them are doing at least 60% bookings. And then they show you how much they're making a night. So this property right here, is making $9,000 a month. They charge $500 a night, but it's a big ass. We're gonna take a look at it in a second, but it looked like it's a big ass house, 18 bedrooms. But I'm gonna just show you how some small shit can make you some money. And then I don't know if y'all know the market of Baltimore and how cheap the property is down there, but you could actually get a house for 100,000, 200,000. Just depends on the condition, the area. But they have houses that's very affordable, and on like a $200,000 property, if you got your credit fixed up right and you got your numbers looking good, like I was telling you, you can get that property and your mortgage is only going to be like $800 a month. $800 a month. You can get a $200,000 property and you'll be paying anywhere from, especially with the interest rates the way they are now, you'll be paying anywhere from $800 a month to about $1,000 a month. And if your credit is jacked, you might be paying around like $1,200 a month. But if you can rent that house out and you got 80-90% occupancy, and you're going to get that, because I'm going to show you the other steps that's going to help you get that. You get that 80 or 90% occupancy and you bringing in $5,000 a month or $2,000 a month. Now you just made yourself a residual income of $1,000 or $3,000, $4,000 a month. And it's all about how you set up your house. So we're gonna look at some of these houses real quick, like a modern townhome, blocks away from Camden Yards. So let's click on this house and let's take a look at the listing, because this is what's gonna help. Like this listing, in my opinion, is trash. If I was to go and get this house, one, the pictures are too fucking dark. It's a nice property, but I just feel like they should have invested in somebody to take better pictures so that the property, now these pictures look a lot brighter. That's how you want your property to look. So you can go through these pictures and see the property. They're not doing much. And keep in mind, in a rental property, you don't even need no dresser in the room. If you got a closet, you don't need to buy a dresser. So all you really doing when you buy these properties, you just putting beds, some slight furniture, and you can get you can get nice decor from some nice places. I got some places I can advise y'all to too. If you're not in Maryland, I don't know no places, but in Maryland, it's some bargain furniture places that basically take old hotel furniture and they resell it at super low cost because they don't have the space to keep storing all of this furniture. So you can find places like that in your area. You can find couches, nice chairs for like 20, 30, 40 bucks, y'all. Put these in these houses and get them joints looking nice and start generating an income. So like that house, it wasn't a bad house. I just feel like their initial pictures, because that's what a person's going to see when they first see your property, is these first pictures, they were kind of dark. They should have probably started with some of these bright pictures, because that's what's going to attract the people to buy. They got nice reviews though. People are going into these houses. So you want to analyze the market for profitability. Two, locate your space. So you locate your space. Then the third thing you want to do is build your team, because like I said, you don't want to have to do all the footwork if you got a job or a 9 to 5 and you're going to be occupied. So you want to build a team. You want to get a virtual front desk, somebody that you can get you a cleaning person, team up with them and work out a payment plan with them to where they get paid per property a certain amount. So it's not cutting into your profits, but you want to start building your team before you actually, get started. Because once you get started, you can let this joint run in autopilot. So you can have somebody that you pay to just answer the phone. Whoop-de-woo-woo. You know what I'm saying? They might need new pillows. They might need this, that, and the third. So you want to have a virtual front desk. You want to have somebody that can be available when your guests check into your Airbnb, that if they got questions about the area, where to park, how to enter the building, how to enter the property, where to find certain stuff that's in the property, like where the towels at, where the extra soap, where the extra toilet paper at, then you got somebody that can give them that information. Or you can create a virtual video or something that you can greet them when they walk in the door, little tab, little something. You can get creative, but it's your own business. Now, the fourth step is staging your space. So you want to make sure that your space has like a theme to it. So like, I'm gonna get to my camera and see if I can see where we at. I suck with trying to navigate on this goddamn on. Can y'all see my camera?
No, I look like it's frozen.
It's frozen. All right, let me see if I can get myself back on. All right, y'all see me now, right?
Yeah.
All right, so like, I don't know if y'all can see this wall, but this is a basically 3D panel wall. So like when you buy Airbnb property, you want to make sure you got something that looks nice, that don't cost a lot of money. Like y'all ever seen the grass walls people be doing?
Yeah.
You can do grass wall, you can do the panel walls. Get a nice wall in your joint. Don't cost much, maybe $100, right? Put the wall up. When you take your pictures, you make sure you show them people that you got a nice background or a theme, you know what I'm saying, in your spot. You can create themes. So like this joint I'm putting together now, and this is exclusive. I don't even give everybody this information, but I'm putting together Airbnb right now in Baltimore. It's right down by Camden Yards. And the essential part about Baltimore is that Baltimore, you got the stadium, you got the Ravens Stadium, and you also got the Orioles Stadium. They're right next to each other. Then all in that area, you got aquariums, you got the harbor, you got just a whole lot of bars and restaurants, nice places you can go and eat. It is the hood. But the guests don't be knowing that, and these people just want to have somewhere to stay. And then with COVID going on, Airbnb has actually outperformed the hospitality market. In the hospitality market, they've outperformed hotels and everything. So people feel more comfortable staying in them than they do in hotels now, because you gotta get on elevators, you got COVID, you don't know, nigga might hop on the elevator with you with no mask, you feeling uncomfortable, you might want to hop off. That's actually happened to me before. So I was ready to fight. So I'm like, dog, well, you don't got no mask on, you just gonna hop in with me. But so a lot of people feeling more comfortable with having an Airbnb, more space. And then I don't know if y'all saw some of them prices that I showed y'all. Some of them joints was like $50 a night. You can't get a hotel that cheap. So, and then a lot of people in the hotel business, the Airbnb business, depending on the type of property you have, you can set it up where you can just rent out each room, $500 or $50 a night per room. I've seen where some people take their house and turn the basement into Airbnb right in this area right here, Upper Marlboro, near Andrews Air Force Base and all of that, where they're just renting out their basement for $50-$60 a night, and then they got the door with a special lock where the person can't enter. All right, so where was I at? You threw me off. Stage your space. One, you want to, like I said, staging your space, you want to have a theme or something set up so that you can show people that you got something more attractive to compete against the other listings in your area. So like I was telling y'all with the Baltimore play, I got a house that I'm getting now. I'm in the, and y'all can help me with this. Y'all can give me some input, but I'm on the cross of making it like a elegant looking house where it's just, more the aesthetics of more modern, like the 3D panels, the grass wall, or I was thinking about making it a sports house where, because a lot of the people that's going to end up renting in that area or doing the Airbnb in that area, they might be just coming in town to see a game. So if I got the decor with the Ravens and the Orioles and all the teams from the area in the house, and each room has a different team theme, I thought that might sell as well. What do you guys think?
I think that's very profitable. And also, like, you don't even know who is going to rent it. Like you said, it's in the area of sports. You could also do things where if females renting it, you don't have rent rates and stuff like that.
That's exactly why I've been on the cross about it, because it's like, all right, do a whole sports house. Females do like sports, but every female might not be into it that might come in that area. So that's why I've been on the cross fence about how I'm gonna stage this house, because
You could set rooms in like different type of aesthetics, you know. So if you had a room specifically for the Orioles and a room that was specifically for the Ravens,
but then also have something that accommodate people that ain't in the sports in the same house. That might be something to explore. But that is stage. That's the step. That's the fourth step of the Airbnb business. Another thing you want to do, because you want your business to thrive, you want it to survive, you want to up your occupancy rate. You want to make sure that people want to rent your room, so that your reviews on Airbnb are everything. And in order to get these reviews, one, you got to have some, you want to leave some freebies in there. You know what I'm saying? Some freebies in your Airbnb. So what a little play that my mentor that taught me a lot of this stuff gave me was, he goes to the liquor store and buys a cheap case of wine. Probably costs like $15 to $20 for a case. You probably get like 6 or 7 bottles. And you just leave a bottle with every guest that checks in. You definitely want to have your soaps, your snacks, and stuff like that. And people appreciate that when they come to check in your spot, because it makes them feel more comfortable. And then what my mentors told me is that I would say like 90% of the people drink the wine. And he know, because when he come to get the room cleaned back up, you see the wine is either missing or it's been opened. You know what I'm saying? So they're gonna enjoy that wine. They're gonna leave you a good review. Step 5 is just listing the space, using the right words. I'm gonna take y'all back to the Mashvisor site real quick. All right, so we get back to Mashvisor. You want to make sure, one, your listing, you put time into your listings. And then everything that I'm sharing with this real estate, because you guys might not even want to do real estate. You might just want to invest in your own business, whether it's selling t-shirts or whatever. The same information, the same knowledge that I'm giving out, you can apply this as far as building your team, as far as analyzing the market. You know what I'm saying? These steps, these apply not just to Airbnb business, but any business. So like I said, and staging your space. Like when I bought my store, I wanted to make sure my store looked a certain way, because a lot of the used tech shops, they look very used tech shopish. Like they didn't look, the aesthetics wasn't really modern, didn't have a vibe to it. When you go in like a T-Mobile or something, they got the neon, the LED lighting. And so I wanted to have that vibe. I didn't want to have to just walk into an old repair shop vibe. So that separated my company when I was doing my computer business. Listing my products, listing number 5, the number 5 step is listing your space. So we're going to take a look at how people listed their space, and you could tell the difference between the people who got 30% and 70%. So like, let's look at this joint and let's take a look. Let's see. So one, I know y'all can see this, right? Y'all see these cords hanging? These are just terrible pictures. So they didn't care much about how they listed their space. Because I definitely wouldn't have had all them cords showing. You want to use words that make your space sound like what the clientele you want to have. So like in this space, I would have put high, like use words like luxury, use words like designer. Those words stand out to people in the listing. So if it said designer apartment blocks away or luxury apartment, he put affordable. You know what I mean? Not bad, but you might be wanting to attract a certain clientele. So you want to use words that attract that clientele. So you want to do some research and just take a look at other listings and see what words stand out that make the listing sound really like dressed up and better than what it really is. And you can apply that with your own businesses, your own products that you're looking to sell. your own whatever you're trying to do. You want to make sure that you're listening, you put time in it. Don't just be like laptops for sale. We have like go into detail, dress it up, make it sound real good. You know what I mean? So you definitely, if you want to survive in any business, that's something you're going to have to do. And then the sixth step is hosting, making sure that you welcome your guests, make sure that people feel welcome when they come into your Airbnb or in your business. Like I said, I'm going to try to make this go parallel with businesses and real estate. So welcoming people, making sure that they feel comfortable, making sure they got an extra pillow here, extra this there, going an extra step that other people won't go to make them have that memorable moment, and want to do business with you again and again, or rebook with you every time they come to that area. They're going to be looking for your property or looking for your business. And then the last step is automate and duplicate. You want to be financially free. You don't want to be tied to the business. You don't want to be stuck doing all the work. So that's when you at that point you find somebody, you teach them the game, and you have yourself a protege that can actually automate the business for you, and you pay them a percentage or whatever the case may be. Last, because I know this joint is going on and on. Let's get to cryptocurrency, y'all.
Hey, quick question with the Airbnb.
Uh-huh.
Say if you are leasing the property to flip it and make the Airbnb, do you have to disclose that to the person that you leasing from?
Yeah, but I'm gonna tell you how they're gonna allow you to do it. So, one, you find a property that you want, right? You call that listing agent or whoever you meet in the meet about the property. You throw on your Sunday's best. You throw on your best outfit possible. You throw that thing on, right? And they say meet them at the property at 1:00. That means you show up at 12:30. You get you a binder or a folder of some sort, and it ain't gotta have nothing in that motherfucker. I'm gonna tell you why though. It just make you look organized. You dig what I'm saying? You ain't gonna never open it, but you show up with it because your goal is to impress this person. Because at the end of the day, they want to have their property generating whatever the money is they looking to generate. And at the end of the day, they not just money hungry, but they want to have a good person in that property. So you have to be that person that you ever met somebody and you was interested in that person, and they smelled good, they looked good, you exchanged numbers, you couldn't wait for that goddamn phone to ring. You dig what I'm saying? You couldn't wait for the phone to ring because you saw everything was just looking too good. And a lot of people not gonna show up like that. A lot of them gonna show up late. They gonna show up just not in order. They're not gonna look business oriented. So you want to convince this leasing agent to allow you to turn this spot into an Airbnb. This is the play. You call them, you show up early, you let them know what you're trying to do. When you get there, you let them know exactly what you're trying to do. And then when you leave, you act like you got other places to look at, and don't act like you're pressed for their business. And you have to be able to accept no's. You're going to have to be able to accept no's, because it's not going to be a yes on the first person you try this with, but you're going to have to keep going and going and going. But you want to, before you hop out the car, you want to hit yourself with some good cologne or some good perfume. You want to smell good. You got your nice gear on. You got your envelope. You go in, you look at the property. You let them know your plan. You already have a 7-step strategy right here. How you're going to put these people in, and how you're going to, and if they're charging you $1,500, and you charging $100 a night, and you got a 90% booking rate, you got profit margin. You get a 70% booking rate, you still in the profit margin. You dig what I'm saying? Only at 50% is where you break even, because if they charge you $1,500 and it's a 30-day month, at the 15th day, that's when you made your $1,500. And then you can also make money on Airbnb with the cleaning fees. They got some other fees that you can add into the cost of the rental on the backside that you can actually pad your pockets with as well, like cleaning fees and other little things that you can add into it. So any other questions you had about the Airbnb play?
Nah, that was good.
But you can go in there, you talk to these leasing agents, you let them know this is what you do. You don't act like this your first time on the block. You dig what I'm saying? You tell them this is what you do. I lease properties and I put people in them and I turn over, and then you let them know the benefits of why the Airbnb is gonna be better than them finding a tenant. The fact that you're gonna have a cleaning person coming in there every 2, 3, 4, 5 days, or however much time these people be leasing your property, you're gonna have a cleaning person coming in there and cleaning that property and making sure that it stay clean. That tenant is not gonna guarantee it. I know y'all seen people rent property and y'all go over their house and see how they be keeping the joint.
Right.
Carpet don't be vacuumed, shit on the walls, it be fucked up. By the time that person get that joint back, in order to rent it back, they gotta rent it out to another person. They gotta put thousands of dollars into it. By the time you finish with this Airbnb, that person ain't gonna really have to put no money into that property because it's gonna be well kept throughout the business. You see what I'm saying? It's gonna be well kept. There's no way you're gonna be able to rent that property out and it look messed up. Y'all ain't cleaning the joke. Nobody's gonna stay there. They gonna definitely leave bad reviews, and your Airbnb ain't gonna be generating no money by the end of the year. So
Okay.
all right. So last thing I wanted to talk about was cryptocurrency. Has anybody ever purchased cryptocurrency or interested in purchasing cryptocurrency?
I did Bitcoin.
And how did you purchase it?
Robinhood.
Okay. So you want to get your shit off of Robinhood ASAP. Not ASAP, but like I said, one, Robinhood is more for stocks. They just kind of, I think they seen the opportunity, they jumped into it with cryptocurrency, but it's not giving you the full experience of investing in cryptocurrency. And like I said, they don't have that back. So like the US dollar is supposed to be backed by gold. You know what I'm saying? So, and we know that the more they keep inflating it, the gold is not enough gold to back it, so the value is decreased. But cryptocurrency is backed by the blockchain, and if your crypto hasn't been purchased through the blockchain, you really don't own it. You can't send it to nobody on Robinhood. Like if I was to say pay me $50 in Doge or in Ripple or Bitcoin or something, and your crypto sitting on Robinhood, you're not gonna be able to send it to me because it's theirs. It's not yours to send, so they don't even have an option for it. And it was the same way on Cash App for a long time until they just made it available for you to actually own your coins and send your coins out. So you better off buying Bitcoin. If that was the coin you buying, you better off buying it on Cash App than Robinhood, just for the simple fact that if you decided you wanted to move it somewhere, you can. A lot of people, I'm glad we're talking about this. A lot of people don't think about this, but long-term investing, when you buy a stock, say you do hit big on it, you want to at least hold that stock. Write this down, y'all. You want to at least hold that stock for a year and a day. And I'm going to tell you why. Taxes. You got to pay taxes on this stuff when you cash out. It's just like anything else. When you decide to cash out or the investment, you're going to have to pay taxes on it. The taxes are lower when you hold onto a stock for a longer period of time. So the time frame is like a year and a day, and it's reduced to a very low tax percentage. Whereas if you went in and you bought crypto or a stock and you go in and say you hit 10,000 and it only took you 6 months, you cash that out, you're gonna pay a higher percentage in taxes. So a lot of people don't.
You said
huh?
You said the taxes are lower when you what? When you hold it?
Hold it for a year and a day. You gotta hold it for at least a year and 1 day. A year and a day, and you're gonna pay a lower, like almost 10% lower in taxes on that money than you would if you just made it very fast and cashed out. And see, that's the thing with Robinhood is you're not gonna be able to defer the taxes you making off your money in it. You ain't gonna be able to defer it because once you sell, they already printing your 1099 up. I don't know if y'all ever went into that section where it say documents or tax documents. They already adding your money up, your profit and loss. They putting profit loss statements together as you go. So as you buying and selling, they already putting that money on your tax that you're gonna have to claim at the end of the year regardless. And if you
Is the I think it's crypto.com app. I think is that crypto.com, is that a good one?
Crypto.com, yeah, that's a good one. I'm not on that one. So
Okay.
if you guys are doing cryptocurrency, one, I would say get a wallet. Now the best wallet, I'm gonna put it in the chat, is Exodus. Or you can get a ledger. Now, the reason I like Exodus is because it's a I'm trying to figure out the word. It's like a not an online wallet, it's a hardware wallet. So basically, you can download this wallet onto a phone or a computer, send your coins from whatever exchange you purchased them on, and actually store them there. And then the catch with that, well, it's not really a catch, but it's the thing with it is the security measures are so super tight that if you lose your recovery passwords and stuff, you could lose all your bag. You know what I'm saying? So you when you set up your account, you want to make sure you keep all the information you entered in it, because they're gonna give you a 12-word recovery password. It's gonna consist of 12 words. And if you ever get locked out your account or anything like that, where you got a new device or new computer, new phone, and you gotta re-download the app to sign back in, it might ask you for those 12 words. So you definitely want to keep up with that. I would buy some type of cloud space or do it in like Google Docs or something where you keep store those 12 words so that if you ever lose, because they're writing on a sheet of paper and you move around a year, 2, 3 years later, and you want to get in here because you notice that the market has really grown over the time period and you done forgot where you done put your paper at. You know what I'm saying? So you want to store that in a cloud. I would store it in like a Google Cloud or a Dropbox account somewhere where, you know, it ain't going on. It's hard to lose something in the cloud because you're not really responsible for keeping up with it in the first place. All you gotta do is sign into your account and bow it should be there. So
Um,
the Ledger wallet is more of a physical wallet. It's a flash drive that you would put your computer in and then put it in the computer and then send your coins to the flash drive. These are more secure than the computer because, like I said, your computer could get hacked or whatever, but the chances of that are very, very, very low because, like I said, they still need to know your password to your Exodus wallet to get into your wallet to even take your crypto. But you want to, the only way to secure your bag is to have either a ledger, which is the flash drive version, or send it to like a wallet. And some of the, like Coinbase has a wallet as well. You can download a Coinbase wallet and store your coins there, because actually storing them on the exchange is not the same as storing them in a personal wallet. So but crypto, where do I begin?
Wait, quick question before you move on.
Uh-huh.
So when you're talking about the wallet, you're saying like Exodus, is this an app or are you talking about the flash drive? What are you
It's an
talking about?
app. So I mean, where's my phone at? I was in front of me. So y'all, I don't know if y'all saw that post I posted of one of my accounts. So this right here is my Exodus wallet.
Okay, yeah, I see you post that a lot.
So this right here is just an app I download, and I can pull this up on a computer too. But my coins are stored here. So we got like 10 grand in coins right now in here. And real live, y'all, I started with some small money. Crypto is where to go if you're gonna do long term for real, because this is the new stock market. Real live, yo. Like the stock market is cool, but the money I'm making here versus being in the stock market is like on crack. You know what I'm saying? Like it shit is on crack, real live. So like this is where I secure the bag. I got some coins on Coinbase as well. And these, I got like another 10 grand in that account. So these coins, I got them sitting here, but these are not secure. Like leaving them on Coinbase is not secure, but it helps me maneuver. So I leave a certain amount of bag in one place, a certain amount of bag in another place. You want to have it all spread it out if you can. Yeah, and if you are able to keep up with it, because it's a lot to keep up with, but it's your future you investing in. So I got in. I'm gonna give y'all a quick overview of me and cryptocurrency. I got into Bitcoin in 2017. The price of Bitcoin was $1,000. Um, so now y'all know today the Bitcoin is like 58,000. So y'all see the potential in it over 3 years. If I'd have just took $1,000 and bought the whole Bitcoin, of course I didn't have the faith in Bitcoin at the time, just like a lot of probably new investors right now. When y'all start seeing this stuff, you don't really have that much faith to just throw a large sum of money at something. So you throw some a little what you can afford to lose. So I threw like $100 or $200 in at the time. $100 will buy me 10% of a Bitcoin. So that 10%, I think Bitcoin went to like 1,300 within like weeks or days. So I had made $30 early. Like I'm like, wow, man, put $100 in, I made $30. I'm like, man, I should have put some more money in. That's how you always be thinking after the fact, like, damn, I should have put some more money in. So that's when I got into this last strategy I'm gonna show y'all, which is it's called dollar cost averaging. Because a lot of us don't have enough money to just go out and buy a whole Bitcoin or buy a whole share of Amazon or diversify like we really want to diversify and have some Tesla, some Amazon. That shit costs money and we don't have it like that. So you dollar cost average. And that's basically compounded interest, setting up a schedule on these apps. I know it sounds scary at first. It's like, damn, do I really want to let this joint just be taking money out of my account every month? Yes, you do. If you're serious about creating that future for yourself that you really want, you're going to have to sacrifice. It's not going to be, oh, when I get my next check, I'm going to just do this or do that. Sometimes you're just going to have to sacrifice. So on most of my accounts, I have it set up. Take out $30 or $40 a week for Bitcoin, $100 a week for Ethereum, this for some stock, this for that, and they come out every week. And after a certain amount of weeks, your account, you get you as a person, you're going to adjust and adapt to the income that you're left with when you're doing that investing anyway. So after you do it for a certain amount of time, you're like, all right, so I know this is coming on my account. You know what you're going to be working with, and you'll be able to adapt and still be able to live while still putting money aside for the long-term play. So, but it's called dollar cost averaging and that's the strategy of just not caring about what the price is, but just making sure that you acquire equity or position in something. So the more that you have, when it actually does grow, you gonna have more and more and more of them. So dollar cost averaging, the benefits of it is you're gonna be compounding interest, because as things go up and down, you're gonna be adding equity to your position. So you might end up buying one share of Apple. Then next week you buy 2 shares of Apple, 3 shares, 4 shares of Apple. Then Apple makes a major play in 6, 7 months. You done had 7 shares, where it's trying to just buy 7 shares all at one time. You're gonna end up talking yourself out of it. Another benefit of it is it's simple. I mean, you just set it on autoplay. You put your account on there and let it just do its thing. And anyone can do it. It's not something that you got to have a certain skill set or whatever to do dollar cost averaging. You just set your account up and let it play. So these are a few of the different strategies that I use, you guys, as far as investing in my future. Bitcoin, y'all, is a super play and it's still early. I'm not sure if y'all know this, but Bitcoin, they only release a certain amount of it. That was the whole purpose of creating a coin, was to kind of get out of the government's form of being able to control how many is in circulation. So it's only going to be 21 million in circulation. They haven't released all the coins yet because, like I said, it's all on a blockchain. So what happens is they go off of the data rate. of how much activity goes on the blockchain. And by that data rate, they release a coin every so amount of data that hits the blockchain. So right now, I think they've only released like 18 million of the 21 million. But once they release the 21 millionth coin, there won't be another coin created, which means that the price is going to skyrocket even more. And then, like I said, pay attention to the market, because whenever they release these stimulus checks and these income taxes, it's going to create more inflation in the dollar and more money to be in circulation. So Bitcoin prices and cryptocurrency prices are going to rise and rise and rise. So if you feel like you was late to that party, just don't be quick to want to cash out. Like I said, you want to hold on to your investment for as long as you can, and you'll make more profits off of it. So I'm gonna wrap this up. I'm gonna open it up for any questions, and then y'all feel free to contact me. Y'all, like, this would be like a family mentorship. So if y'all jump out there and start doing something and y'all need my insight or my help, don't feel free to DM me or email me, and I'm gonna give y'all the information. You know what I'm saying? This is like it's a mastermind group. So we are all coming together as equals. Even though I'm looked upon as the leader of the group, we coming together as equals. So if y'all go out and y'all find some information that y'all want to come share to the group, drop it on me, and I'll make sure that we put a mastermind meeting together and we talk about it, y'all. So anybody got any questions?
So as far as the crypto, I did, because a lot of people, like you said, getting wrapped up in all your friends and all that. But like you said, this year, like Dogecoin and all them have like taken off. And I mean, I've seen mad people, I went to high school with, just different stuff, just really like
come up off of
yeah. So I'm like, damn, I need to figure this out. You feel me? So I just been trying to see like the best way. Like, I know you mentioned, was it called Weebly? Was it Weebly or something? Is that the app? It's one of those.
Which one?
I think it's called Weebly, or I don't know. It starts with a W. I don't remember.
Oh, Weeble.
Yeah, I think so. Yeah, didn't you mention that one? Like, as far as
So they're in the same boat as Robinhood. They offer like 7 different cryptocurrencies, but it's more so for you just to trade. It's not really for the long-term investors. So
okay.
you can get on there because you don't really own your coin. So if you plan on holding this coin, like, bro, I've been holding coins since 2017. 2017. And I'm gonna give you a quick little story. So 2017 was the last the bull market. You know about bulls and bears, right?
Right.
So you got the bulls and you got the bears. The bulls is when the market is going good, and bears is when it's correcting, or the prices are dropping on everything. It's more like a market crash. So, man, the last bull run was 2017. The Bitcoin at start of the year, I would say like $500. I got hit to around about $1,000. That's when I got hit to it around 500, but I ain't had no faith. Like, it was a slow, me putting my money into it was very slow, because I was like, as soon as I throw my shit in here, it's gonna crash. Watch. You know how it be. You be like,
right, yeah.
As soon as I throw my money in, it's gonna crash. So I sat back and watched to go from 500 to 1,000. And I'm like, damn, I could have doubled my money, but I'm sitting back acting scared. I was like, man, let me just go ahead and get in. So that's when I got in, and it steadily went up for an entire year, bro. This had a whole bull market, and what we're seeing now is a repeat of 2017. If you was in the market then, bro, it's like deja vu. It's like fucking deja vu. I put $2,000 in over time, like dollar cost averaging. I put $2,000 in over that year. By the end of the year, bro, my account had $20,000 in.
Oh, wow. Okay.
A lot of you not, bro. Like, I had $20,000 in. But this is what I learned, though. Did I walk away with that 20,000? No. I didn't have an exit strategy, bro.
Okay.
So what it was, and I'm not mad about it, because I ain't lose no money. I never lost a dime in a crypto game yet, bro. Well, I have, but I made so much money that the money that I lost doing certain little plays, I made so much money in profits that it wipes away the losses. But because I did some stupid shit. They had like some MLMs that people try to get you to join, and then one of them got investigated, and the money I had on their exchange, it was starting to build, but then when they got investigated and found out it was fraud, everybody that had their money in that joint lost. You know what I'm saying? Yeah. So like I probably lost $1,000 in there, but I made grands off of it. So it wasn't like I wasn't ready to jump off no bridge and kill myself or no shit like that. You know what I'm saying? It's like, all right, a lesson learned. You know what I'm saying? Like, all right, next time I can't be so gullible and just because that shit sounded so good. It's a joint. I'm gonna give y'all the joint. Y'all can look it up. It's called BitConnect. I don't know if y'all ever heard of it. The company don't exist no more, of course, because they got shut down. But people, I know a dude that made millions in the joint, and that's what got me in. You know what I'm saying? And he ended up getting investigated by the SEC. He had to testify. That shit got crazy. I wasn't that deep into it as he was. He made so much money. He was like the face of it almost. So they brought him in, you know what I'm saying, as an investigation. But so you got to be.
Was he arrested?
Nah, he didn't get arrested, but he lost a lot of money. You know what I'm saying? He lost a lot of money, and he was looking like at that time. It was everything was new, so it was like a gray area. We thought he was gonna go to jail. You know what I'm saying? It was like, that motherfucker might go to jail, lose all his trying to, because it was an MLM, so he was getting paid off of bringing more people in, and he had brought so many people, and he made millions of dollars, and he became almost like the mascot. You know what I'm saying? He was getting it, bro, like getting it, bro. So it was crazy. But what I learned though is when you in a bull market like this, if you do want to take some of this money and do something with it, then start pulling. Don't just think that it's an elevator ride and it don't come back down. You know what I'm saying?
Right.
So don't be scared to get in, but just know that if you see a certain amount, like right now I'm at a place where the profits that I'm seeing off of my investments is no point for me to pull, because even if it dropped, like it's been days I've lost 2,000 in one day in a market of profits, and it looked bad in your account because you're checking it every damn day. Stop checking it every. If you don't plan to cash out tomorrow, why are you looking at it every day? Right. That's what puts the emotions into us, to make those emotional decisions and not the strategic decisions, because we looking, we like, we losing. That's how my homegirl lost 2,500. If she wasn't looking at her Doge because she believed in Doge and knew that Doge was going to be big one day, you know what I'm saying? There's a difference. But if you look at it every day, you're going to emotionally pull some money out that you're going to either walk away from a potential long-term profits, or you know what I'm saying, you might end up losing money because you're trying to stop a loss that you thought was going to be a permanent loss, and it wasn't. It was just temporary correction in the market, and then the market bounced back up. So don't make them emotional decisions. Try not to check your account every day. Real life, that's the hardest thing to do, especially when it's making money. And you like, bruh, real life, my junk makes about $1 every day.
Oh yeah.
So it's hard not to check it. It's hard not to check it.
Right.
You know what I'm saying? Because I'm like, damn, I'm getting rich. But you don't want to check it every day. You know what I'm saying? Because it makes the emotions, it make you start thinking like, should I just take this 1,000 out and leave the rest in? Or should I do this? But when you pull, you lose your position. Because now when you buy back, you're not going to get the price you paid the first time, most of the time. So, right. Like I got in Doge, bro. It wasn't even a penny. It wasn't even a penny.
That's doing good. Right
so I'm gonna give y'all, because it's two of y'all still on here. I'm gonna give y'all these two cryptocurrencies that if you, and I'm not going, because it's too much for me to tell y'all how to get them. So I'm gonna let y'all do your own research on that. But these two You wanna increase your, you wanna have a happy couple months. Safe move. Y'all heard of that one?
Yeah, people have been talking about it online recently and on YouTube.
Sheba. Sheba.
Wait, my connection kind of was going out. What are these you're putting in the chat?
These are all right. So these cryptocurrencies that if you want to be on the next Doge wave, you want to be early and get a good price. These two you want to take a look at. They aren't easy to purchase. They're not easy to find, but if you do your research, you can acquire them. They're not hard either, but you just got it's not like some of the other cryptocurrencies where you can just go to Coinbase or other joints and grab. So, but if you do your research, these aren't even a penny yet. They don't cost a penny. So like $100 could buy you 1,000,000 of these. You hold on to them. I'm exaggerating. Might not be 1,000,000, but I'm just saying a super large number. You hold on to them, and it go to 50 cents one day, and you just got set for life. You see what I'm saying? By taking $100 that you would have put in the bank account in the savings account, you take $100 and you grab both of these, and you wait for it to do what it do. It's gonna take time, bro. Man, 2017, actually in 2020, those was a half of a penny. From 2017 to 2020, we had that much time to get in. At a half a penny, you could have took $1,000 and got let me do the math. I'm gonna do the math on this one just so I can give y'all some realistic numbers.
Yeah, this other dude I went to school with, he bought about like I think like $800 worth like last year or something. And I think by he said, he said by May it would have been like he said like over 10 grand, but maybe it would have been more.
I'm about to do the math now on $1,000 at a half a penny. You would have had 20,000 Doge, right?
Mm-hmm.
Doge is at 70 cents right now. Be sitting on 14,000 off of 1,000. He's correct. All right, so that's 14,000 you could have made off $1,000, and that was literally in December when that price was at a half a penny. So
that's crazy.
You want to make six figures, just multiply that times 10. So you could do like 10 grand in, right? And divide that by that half a penny. Hold up, the numbers ain't adding up. 10 grand. It's giving me the same numbers, but it would have been 20,000 times 10. So you'd have had 200,000 Doge. And you would have got the 70. Yeah, you'd have had $140,000 off a $10,000 investment. And some people put that in some of the dumbest stuff. Some people go to the club and buy bottles 10 times a year. $1,000 right there. You could have had $140,000 sitting to the side for another move or another play or whatever the case may be. So it's always good to kind of learn these different asset classes, these strategies, and then start taking money. And most people ain't sitting on. Most people don't got $10,000 in the bank, just sitting there. And if you are that lucky to do that, then I definitely think you should start trying to find somewhere to put some of that money at, so that you just not sitting there making 10 cents off of it every month from the interest they giving you. You know what I'm saying?
Right. Yeah, because the Coinbase and the real estate was definitely the two things, because like you said that, and people say it all the time. Like I listen to a lot of audio books and all that. Is be like, once you hit like a certain cash value, at that point it just makes sense. You know what I mean?
Yeah. Once you get acquired a certain amount of money you've been saving and you don't have no idea what to do with it, that's why you need to start learning some investment plays so that you can be like, all right, and I throw this here. So me, I take a few $100s every month and I throw it in different moves. And then because over time, bro, it's compounding interest, bro. It's compounding this interest. And then when you sit and look back 5 years from now, you'll be like, dang, yo, I was real live broke. And you probably didn't even think you was broke at the time. But when you see, when you see what you're sitting on, like any day, like me personally, any day now, if I wanted to cash out 6 figures, I can cash it out. And I got different assets that I can liquidate to do so, whether it's my house, which I got like $70,000 in equity in my house. If I wanted to sell right now, because the market's appraising for 70,000 more than what I paid for it. So I could sell and pay the loan back on the house and I'll still have $70,000 in profit. If I wanted to cash out some of my cryptocurrency, if I want to liquidate it, sell it and use it to do something, I can do that. If I want to liquidate my stocks, like I got so many different plays that I've been building over time, and I just started with a little bit here and a little bit there, and time go by and years go on, and then you look back and you like, shit, I'm jacked up. You know what I'm saying? Right. Like, fuck, I'm up.
The big reason why I wanted to join this is because, like, I don't know what stock and the crypto was, and I never have invested in it. So I just was looking it up right now. So is Coinbase like the main?
That's the #1 exchange. That's the best way to get your feet wet.
Okay, so going to that.
Yeah,
I was looking into.
You want to get your feet wet.
I started looking.
Yeah, you can't get Shiba and SafeMoon on there. But like I said, they are less than they are less than a penny. So you still got time to catch them before they shoot up like those that do. Those took 3 years to do that. But you want to get your feet wet at Coinbase and just learn how to buy the coins, learn how to send the coins. Because the way you send coins is it's modern. So I mean, if you're used to doing Apple Pay and Cash App, it's kind of similar. Where you would get somebody cash tag and then just send them X, Y, and Z. It's same thing with cryptocurrency. It's just you be sending them Bitcoin. So you and then their cash tag is like a generated series of letters and numbers, because that's why it's called a cryptocurrency. It's an encrypted thing. So it doesn't say that you sent it to this person by name. They're encrypted by an address. You see what I'm trying to say? So like just imagine your Cash App, but instead of it saying you just sent Paul $500, it's gonna say you sent ABXY567 to X. You know what I'm saying? It's encrypted. You just, and it's dangerous because if you don't get these addresses right, your money is lost in the air. Kind of like Cash App though. You send money to the wrong person, shit gone for real. Yeah. Yeah. So that's why I say you want to get your feet wet with Coinbase, because that's the starter. That's how I would say 90% of the people who got cryptocurrency, they started on Cash App. I mean, not Cash App, Coinbase. And either easier method is Cash App, but Cash App only offers one currency. If you want to really get your feet wet and get familiar with the other asset classes in there, then Coinbase is the way to go, because they're gonna have like 10 or 15 different. They got actually more than that, but they're gonna have 10 or 15 the top joints. Another thing I'm gonna give y'all, if y'all really doing the cryptocurrency, is coinmarketcap.com. I think it's a .com. It might be a .io. But if you want to research cryptocurrency, you want to use this website. This joint right here gives you the top. They rank them. So the top 10, they give you the top 100 on one page, and you really can't go wrong investing in the top 10 with no research. You know what I'm saying? Like, you don't have to sit and do a bunch of research. to invest in them top 10. Them top 10, they the top 10, and they've been holding that spot for a long time. People believe in them, they're gonna grow. Then that's the reason they the top 10. So you go on there, coin market cap, and you go with them top 10, you good regardless. But sometimes you got coins like Doge that, man, for the past 5 years never was a top 10 coin. Now that joint like number 4. It's number 4 on the top 10 list. That shit crazy. And that's just because of what it's been doing in the past couple months. It could easily drop, you know what I'm saying? So that top 10, they fighting for their spots. But most of the time, them top 3 remain solid, like Bitcoin, Litecoin, Ethereum. Well, actually, Litecoin ain't even top 3 no more, but Bitcoin and Ethereum has been holding top 2 since the beginning of cryptocurrency. Ain't nobody took them 2 spots. So they're never gonna be a bad long-term play. You know what I'm saying? But anything under that within the other 8 that's in the top 10 spots, they battle for position at all times like a horse race. You know what I'm saying? One might be in 3rd place, then it dropped to 7th place, and then it's back up. It just depends on how the market moves. But when you stick with them top 10 cryptocurrency coins for a long term and just compound, I can guarantee you'll be a 6-figure person in like 5 to 10 years. And when I say 6 figures, I ain't talking about making 6 figures a year. I'm talking about sitting on 6 figures in assets that if you decide you want to cash out and live off of or do something with, you got it. You know what I'm saying? To make another play and acquire more wealth with.
So I know you said, excuse me, I know you said about like owning the coins, and because you were saying like Robinhood and Webull and some of them are more like trading sites.
Mm-hmm.
So let's say like me, I had got like, I don't know, it wasn't much. It was just kind of tested out. I think I got maybe like $20-$30 of Doge or something on there. Like, would I be able to transfer that to one of the other ones where I actually own the coin, or would it be?
So this is the downside of that. If you really want to own those coins, you're gonna have to sell them and then buy them. And then the downside to it is you're gonna be probably buying them at a higher price than you got in there. And then secondly, the profit that you made is gonna end up going on your tax returns for this year too.
Oh, gotcha.
So that's why we've been preaching that Robinhood ain't really your best friend for this. You know what I'm saying? Okay. But it's better to know now than to know a year from now, and then you getting in even later at a higher price. Like say Doge hit $2, and you just found out you don't own none of yours. You know what I'm saying?
Right.
Like, God damn, you'd be really blown, and you got to sell them and buy back in and pay taxes on that money.
Got you. Okay.
Yeah, so you don't want to do that.
Okay, cool.
All right. Y'all straight? Any more questions?
No, I think you definitely gave me a lot for sure.
Yeah, I definitely learned a lot. I'm still just trying to understand like so I just went onto the coin market cap. So when I go on here and I'm looking at these numbers and stuff, that's what I'm really trying to understand what I'm looking at.
Okay, I'm gonna go on here with you and do a screen share. Coin market cap.
Because as you talking, you like, number 4 is Dogecoin. Like that's exactly what I was looking at. So
all right, so yeah, Dogecoin number 4, but it wasn't number 4 forever. All right, so y'all can see the screen now too, right?
Mm-hmm.
Yeah.
All right, so as you see, Bitcoin number 1, Ethereum number 2. Binance Coin is very good. Binance is the next to Coinbase, which is where you can buy coins at. Binance is like the real deal as far as a crypto exchange. They carry hundreds of pairs of coins that you can't buy anywhere else. And they ended up creating their own coin, and the value has since then skyrocketed. Like last year, you could have got this coin you see is at $6.49. This joint was like $13 last year.
Dang.
You could have bought you 10 of them joints for like, you know what I'm saying, $100 or something like that, $130. And now you got 649 times 10, like $6,000. So that's why I said this is a super good play for everybody. Now, oh, I'm glad we here. So y'all see this number 5 tether?
Mhm.
Y'all see that joint? Tether
Yeah.
is always is exactly what it's called, a tether. So if you are trading and you don't want to pay taxes on getting out of Doge, if Robinhood has a tether, which I'm not sure if they do, you can convert the tether, which is like converting it to a dollar. It always remains a dollar. Sometimes shit might drop to like 99 cents, but you're basically not losing anything when you convert here.
Gotcha.
You caught that, Tony?
Yeah.
All right, so like I'm gonna give you an example. You go on Coinbase, right? You buy Ethereum, and the only reason I would ever use this, I'm gonna show you. I'm gonna give you an example, basically. All right, Ripple. I used this recently with Ripple. Ripple, I got in Ripple like earlier this year. It was 30 cents. Bought 1,000 of them, $300. Right now, that 1,000 of them is worth $1,500 because it's $1.50 now. So that $300, I turned that into $1,500 in like 3 months, right?
Mm.
It shot up so fast, I was scared it was going to drop. I took my $300 that I invested and I tethered it. I turned it into tether and let the rest play out. See what I'm trying to say? You caught the play? Yeah,
Right.
now I'm not at risk of losing shit because I got my money out and I'm letting the other 1,200 play. And I don't got to pay taxes on it because I didn't convert it to a US dollar and put it back in my bank account yet. It's still on the exchange's tether. So now I can take that 300, find something. Now, this is a strategy I normally use is find something in the red that's down for the day. This joint's 4% off. This normally would be at 166 or something, right? Now I could take that 300 and catch this joint at 4% off or catch this joint at 5% off. And then maybe tomorrow it's up 5%. And now that makes it up 10% because it has to get back to 0% from this 5 negative and then go up 5 more percent. So now you're at 10%.
Mm.
And you just acquired a whole nother asset off of your initial investment from XRP. And then you can just duplicate that play and keep doing it. You know, you took that 300 and put it in here. You wait a couple months. When this joint make $2-3, now you take it 300 out. You let the profit ride, and you grab another jump. And you can do all of this over $300. That's how I took $600 and turned it into 10,000.
Dang.
Yeah. And then, like I said, you want to compound on top of it. So you don't want to just only work off that 300. You want to at least take, like I said, do the monthly thing where you throwing money into the market every month so that you got more of a pot to play with in the casino. You know what I'm saying? Even though it's not like a casino, but man, if you take this strategy, I can guarantee you're not going to lose. You're not going to lose no money.
All right. That's definitely, I acquired something just now.
Now I'm gonna go a little deeper because I know my staff, they got a store full of people. But they done cleared out a lot of the people, but they really need my help out in the store. That's why my staff keep coming in here. But I'm gonna show y'all. Well, this one's an easy one. So y'all want to know where to buy at. Coin Market Cap tells you everything. So like Cardano, right? I'm on Cardano. It one shows you a history of the charts. So as you can see, it's been bare for like 3 years. This was the last bull run I was telling y'all about, like 2018, 2017 era, right? Where it ran it up all the way to 2018. Then it started crashing, right? Now it's back in another a bull market where everything is going crazy, right? Now you want to acquire this coin. You don't know where to buy it at. You go on Coin Market Cap. You hit this button right here that says market, and down below, these are all the marketplaces that sell this coin. You can set up a Binance account. You can set up a Coinbase account. You can set up a KuCoin, a Kraken. Now these other joints, they are more like the stock exchange. They're more like Robinhood. So they're gonna have the orders, the buy orders and the sell orders and all of that. Whereas Coinbase is a little more simple for the beginners. You can just say you want to buy it and it'll buy it at market price. I remember earlier I told y'all what market price is. It's just the price of whatever that thing is at that time. But if you really, like I said, if you really can look at this chart and see, like, let's go to a 7-day. And we could see it's been bouncing up and down right here. So it's been like 165. Then it got the 150 at one time. Then it went to 150 again. You might not want to buy that 165. You might could put an order in at 160. And that way, when it do go back to 65, you made 5 cents per share that you bought of it. You see what I'm saying?
Mm-hmm.
So you could gauge the market that way and find the floors. You want to find the floors. So now this is a lot more time consuming. So like I said, you got methods that require your time. You sit here and, but it's more profitable. Or you can, like I said, dollar cost average and buying at market pricing whenever time you got the money to do it and just hold over time. And as you see, within 3 months or a year, you going up in value. You know what I'm saying? So, but this, if you want to get into cryptocurrency, this is the best jump. And I'm gonna show y'all a couple of other tools I use on here while we on here. Let's see if I remember how to use this jump. Gainers and losers. You want to see what's on? You want to see what? Like I was telling y'all about Shiba. Remember I put Shiba in the joint. That joint is up 400% right now. It doesn't even cost a whole penny. You could buy millions of these, bro. Like you could literally take your, so whoever had this last night, say you had $100 in last night of this, you would be sitting on $400 or $500 a day. Then overnight.
But you said
that's crazy.
Base.
Huh?
You say you can't get Shiba through Coinbase, or you say you can?
You can't. So what you gotta do, like I said, click on Shiba, go to market, and then it'll tell you where you can find it at. Uniswap is the #1 place to get it right now. Now you know where it's at. Now you just Google Uniswap and find out how to get it on it.
Got you.
Michael Pro. 16 gigs of RAM, 750 solid state.
200. That's what we be paying for them, no matter what. All right. So yeah, so now y'all see how the maneuver through this crypto market. We need to start sharing this information with people. You know what I'm saying? So I go on here and that's how I find hot coins. So I'll go to gainers and losers, and it's very risky to buy these. I ain't gonna lie to you. You want to know why? Because earlier this morning, this 400% was actually 500%. You see what I'm saying? So it's dropping right now, and it looks enticing to buy right now, but just know it's on the decline. So I would wait on Shiba today. Maybe tomorrow it'll be on this side where it's down 40 or 50 or 60, 70%, and then you catch it on sale. But the whole goal is to kind of check this periodically, see what is getting this volume, this amount. Like you see the volume numbers right here on Shiba. It's how much money is going in and out today alone. This is 24 hours of volume. This is crazy. You know what I'm saying? It's fine. That's $4 billion is going in and out of this coin. So it's popular. It's more popular than Atlas. It's more popular than these other coins. So you know that, you take note. When you catch it on sale, that's the day you buy it.
Okay, so when it goes to the losers, that's when you want to get in it.
Sometimes waiting on that to happen though you might miss out. So, but you definitely don't want to catch nothing at 400%. If it's up 30, you know what I'm saying? If it's up under 100%, definitely, might be a good time in crypto to buy. But you use the same method in stocks too, because you gotta look at this as you going into your favorite retail store and you catching the sale price at 46% off everything. You see what I'm trying to say?
Mm-hmm.
Yeah, you don't want to be paying 400% up at the cost. You know what I'm saying? Because if it decide to go back on sale tomorrow, then you just got work. You just got work. Cash. We got cash in the drawer.
I don't know if it's too much.
Cash out. I'm in the middle of buying deals now in the store, buying laptops from customers as well. So, but yeah, you definitely want to catch everything on sale. You don't want to catch it when it's not on sale. But certain stuff won't. Like when it's like this, sometimes you might not catch it in the red for a while. You know what I'm saying? And it's going to be steadily rising. So sometimes you might just want to jump in. So you jump in low with a low amount and dollar cost average your way in. You dollar cost average your way in. So like say you had 10,000 to throw at it because you really want to come up. I wouldn't throw that 10,000 in at 400%, but I just throw 100 in and see, just to test the water. Like you want to see if it's hot or cold. You ain't gonna know what the water's like if you don't get in.
Mm-hmm.
So at some point you gotta jump in, but you just want to be strategic about how you jump in. You definitely don't want to jump in at something that's like, look at this joint up top. It's up 3,000 something percent. You think tomorrow's gonna be up another 3,000%? Hell no. Not with this amount of value when all the money is going over here. And down here, pig finance. I ain't even heard of that one. That just hit my radar just now. Y'all got me on here looking. So I'm gonna look up that one. So that's when you start taking your time and you look into it. Then you go on Reddit. You can start Googling, seeing if anybody else talking about pig finance. Twitter's another great tool for kind of finding what's hot and what's not as far as trends. You know what I'm saying? So you can go on there, just type in pig finance in the search jump, see if anybody talking about it.
I sent you a picture of the cash app from my phone.
All right. Give me 1 second about the cash app. Somebody. Some money. But yeah, this is what I be doing at night. Like before I go to bed, I get on here. If I got some money, I'm ready to make another play. Or if I heard people talking about something and I just want to get more, I ain't about to just jump into it off of them talking about it. But if I hear them talking about it, now I know I got this site. I can go to this site and, you know what I'm saying, get some info, see if it's even looking good. And I know how to how to look at the volume now. So you definitely want to look at volume. That's going to tell you how much money is going in and out at a certain time. Then you can also look at the chart and see, has this joint been steadily on the incline? So like in the past 7 days, you see this joint go from basically nothing. If you look at the price right there to something, and it still ain't a penny yet. It got a long way to a penny. So it's so affordable that people are really gonna throw money at this coin and push it up. So I really think this is a good coin. Plus, it's like baby Doge. I don't know if y'all noticed the logo for it, Shiba. But the Doge lovers and the people who missed the Doge wave or felt like they might have missed it, they get in ahead. Now, another thing you want to look at is circulating supply, because it's about supply and demand. Now, this is how many billion Shibas are going to be in circulation. This is the max amount, but this is how many is circulating right now. So all of them aren't circulating yet. Now, just keep in mind that when they release these, this can affect the cost of the ones that are in circulation, because it's supply and demand. So the more supply, you're going to want to hope that the demand of that coin is growing with it and popularity and everything else. That makes sense, y'all?
Yeah.
So those are a lot of the different things. Like me, I ain't gonna lie to y'all, I'm gonna keep 100. I didn't believe in Doge. I still really don't believe in Doge. I'm just invested because I didn't want to miss out. You know what I'm saying? But look at the circulating supply, right? Y'all see how many coins in circulation?
Mm-hmm.
They still have a lot to release. right? So and then max supply. So like Shiba had a max supply. This is total supply. So they have no max supply. They can continue to inflate those, just like the US dollar. They didn't put a cap on how many. This total supply is the same number right here. But when you look at Shiba or like Bitcoin, you got the max supply, and then you have how many is actually circulating. Once it hits that max number, there is no more. The value of it goes up.
Gigs. They supposed to be at 430?
At 16 gig, 2012 or 2011?
What year is it, Mike?
It's 2011. Yeah, it's priced right.
Yeah.
Yes. All right. 1 second, y'all. I want to finish sending this cash out to this guy. He's waiting on me to send him some money. 620. Bad. All right. He got his money. He good. All right. So like,
So they at 89%. So you said once it reaches that means that it's gonna go down.
Say that question. Repeat your question.
The max that it was at.
The max
they was at
number.
89%.
Are you talking about Bitcoin?
No, the Shiba, right? This is Shiba.
Shiba?
Oh yeah. Oh, Bitcoin.
All right. Oh yeah, they're at 89%. No, the value gonna go up.
Okay, it's gonna go up.
Yeah, because there's a cap on how many is out. So like, let's just say it's just like Jordans. Notice Jordan releases a certain amount of shoes every time he drop a pair of shoes, and they sell out. And once they sold out, what do people do? They resell them jumps for more, right?
Mm-hmm.
So the price gonna go up. Yeah. So once you can, they ain't making no more. So once they release them all, this is how many circulating right now. So it's only like 3 billion more. Is that billions? No, that's millions. 3 million more Bitcoins. That's once they release them, somebody buys them and they own them. And that's why I was saying about Robinhood. You don't want to be on Robinhood owning Bitcoin because you really don't own it. You basically lending your money for somebody else to own it.
Well, I'm glad that they banned me anyway.
You know what I'm saying? So you want to own it. So like, and then you can look at these blockchain transactions. Let me see if I can find the blockchain so y'all can see how this shit really be working. Like you can see every transaction that hit the blockchain when somebody buying. Let me see if I don't be getting on here like I used to. So they move the site around. It's kind of hard to see, but I think it's under source code. No, it's under one of these jumps. You can see the whole block. Here you go, blockchain info. These are the blocks. These are transactions right here. Remember I was telling you how they just be coded? You see this? You see the amounts of money, people? This is real-time money being moved right now. These numbers is moving. It's the blockchain. And they get verified. And that's how these transactions. This is not happening on Robinhood when you purchase them. And this, like somebody bought a whole Bitcoin, 1.6 Bitcoin, and then show you the amount of money. This shit just steadily move. It's constantly moving. This is the blockchain at work. And it's in bytes. And as a certain amount of bytes get produced, that's when they release more Bitcoin. And once they release the last one, that's it. I mean, price could go up to like 100,000 per Bitcoin. Might go up to like 500,000 a Bitcoin. You know what I'm saying? It's basically based upon how much money, how much somebody feels like it's worth to them to buy it. It's just like gold. You know what I'm saying? The value is only as good as what the next man willing to pay for. But the fact that it ain't gonna be no more, it's gonna be rich people that just want to have something that didn't have it, and they willing to pay that bread for it. You know what I'm saying? So you want to get in where you fit in. You want to own a piece of this blockchain because that's basically what you're purchasing is a piece of this blockchain when you buy it. That's what you're investing in the blockchain. It's all new. And this gonna be the new stock market, y'all, in like the next 5 years. So I say buy coins and hold on to them. Up here tell you how many different cryptos. It's over 9,000 coins. That's why I said stick with the top 10 if you're just getting your feet wet. And then when you start getting time to click on different jumps and learn what they about, what they here to do. Like they got y'all know how marijuana is legal damn near in all other states in the United States, right? But the banks don't want their money. I don't know if y'all knew that. The banks don't want to take the dispensaries money. So guess where the dispensaries guy put their money at?
They put it through the coin.
Yeah.
That's crazy. So as far as like them lending money for that, is that kind of like the same? They wouldn't lend money for that either, or
What you mean as far as lending? Oh,
like
banks lending the dispensaries money?
yeah, like if they like to start the business, like would that be the same kind of,
Nope, I mean, it's gonna be hard to get that money from.
Oh, okay.
But that's why cryptocurrency, they got different coins that's going to replace that for them. They got coins that's going to be lenders. They got, man, I'm telling you, they trying to disrupt the whole money market, y'all. They trying to disrupt it. The way things have been done, because we seeing that is like, yo, you leave $10,000 in the bank. They lending your money out to people to buy houses and cars with, and they're making a percentage in profit, but they're not kicking you no dividend. At least if you would have gave your money to a stock and invested it in Amazon, quarterly, they're going to pay you back some of the profit. You see what I'm saying?
Yeah. When you put it like that, it just makes so much sense.
Yeah, you giving your money, like think about it. The bank, when the bank open, they don't open with no money. They open begging you to come bank with us. Come put your thousands of dollars and do direct deposit with us. So we can lend your shit to anybody that want a big loan for $20,000 or $100,000 house or $40,000 car. We're gonna loan them that with your money because we don't have no money to loan nobody. We don't have no money to loan nobody. We're gonna loan them your money. You know what I'm saying? And everybody else money that put their money in. And we're gonna actually charge this person a percentage to loan them your money.
Right.
We're gonna charge them 6% annually to loan them your money. And then if they don't pay us your money back, then they get a late fee. Do you get a cut of any of that? Hell no. You know what I'm saying? You don't get a cut of none of that. It's time for us to be on the ownership side. If you bank with Bank of America, shit, own Bank of America. Own that motherfucker. Then you can vote on shit. You see what I'm saying? If you paying T-Mobile for a cell phone bill, own T-Mobile.
Right.
You know what I'm saying? That way, at the end of the year, you sit back and you like, well, shit, I got some of my money back that I paid. Or you can continue to just give your money to everybody and not make none of it back. So the goal is to buy our freedom back. And that's how we buy our freedom back. It's by ownership. So we gonna own stuff.
Right. So I had so like watching different videos and stuff like that, you always hear about, and I think you kind of said it like in the beginning, like paying bills with your investments and stuff like that. Like as far as, because you hear when you watch videos or different, financial people, and they're like, oh, you use your real estate investment to buy your car, you use this to pay for your house, like, but that wouldn't be as far as like the crypto or just stocks. Like you said, that's more of a long term. So that's not like
that's another play I can give y'all. I'm giving y'all all my plays today. Y'all running extended. So all right. It costs you nothing to go on the IRS website, right?
Mm-hmm.
and get an EIN tax number for a business, right?
Right.
It don't cost you nothing to do that. You go in there, now you get an EIN number, right? Then you go and you register in whatever state you in, you register your business in that state. That might cost you about $200, right?
Right.
In Maryland, it's like $200, right? You go on, they got a fast pet track website too that do it. They charge you a little extra. It's like 200 on that site, but if you go the long route, it might be even cheaper. But you can go on it's called Maryland Business Express. If you're in Maryland, you try and set up that joint. It's Maryland Business Express, and they charge you like $150 to $200, and you register your LLC in the state of Maryland. So now that there's no other company can open up a business in that name in this state, right? Then you get you a Duns and Bradstreet. That don't cost nothing. That creates business credit, right?
Okay.
And that basically that's just you setting up an account with a company that collects data on your purchases, whether you buying, you got a lease or you got whatever it is, they're gonna collect information to report for your business credit, right? Then you go into a bank and you've already fixed up your credit because we showed you how to get the delinquencies off, and we showed you how to acquire a self-lending app that allowed you to report that you do have credit and that you're paying it on time and you're building your credit score up. So now you can go into a car lot, right?
Mm-hmm.
You can buy a car in your LLC's name, your business name that you just created, right? Why would you want to do that, right? Because now that you bought your car in your business name versus buying it in your name, you could write that car off 100% on your taxes.
Gotcha.
Whereas,
didn't you do a live on that?
Say it again.
Didn't you do a live on this on your page talking about this?
I might have.
I remember you talking about this before.
But yeah, now you can write off your car on your tax 100%. You can't write off your car 100% if you buy it in your name, because guess what? You go to work Monday through Friday, but on Saturday and Sunday, when you hit the club and you go on your vacations and you take these road trips, that's not business related. So you can't write it off 100% when you buy a car in your name. But when you buy a car in your business name, every time you pay that car note, whether it's a $500 car note, you get a tax credit for that because it's a business expense. You're writing that off. Anytime you pay your car insurance, you're writing it off. It's not your car, it's the business's car, or your car is paying for it. I mean, your business is paying for the car.
I wish I just bought a car. I just bought another car like 3 weeks ago.
You could be writing them payments off. You could be writing the gas off, bro, making it look like you don't make nothing at the end of the year.
What was the name of you said it was a bank or something? The Barnes or something? What?
As far as what? Getting a car?
No, what you said to set up your LLC in, what did you say it was called?
So first you want to go on the IRS website so that you can get an EIN number.
Right.
Then you go onto your if you're in Maryland, it's the Maryland Business Express. You go on that joint and register that business, that EIN number with them. Then they give you some more numbers. You're gonna get like a business ID number in Maryland, you can get and all of that.
Mm-hmm.
That way, now that you got all that set up, you can also go online and get yourself a virtual address. You want to buy a virtual address because when you set up your LLC, you do not want to use your home address. I'm gonna tell you why. The purpose of LLC is limited liability. So the purpose is to protect you from if somebody wanted to come after you for suing your company or suing you in a car accident or whatever the case may be. Once you buy this car in your name, say you get in a car accident and they want to sue you for everything you got. Well, you're limited liability. So you can only sue for what the company has. You can't sue for my house that's in my name and the other things that I purchased in my name. You don't get no rights to that. When you buy LLC, you only can sue me for the company. So say you do wipe me out with my company, I can just start another company. You know what I'm saying? but
Right.
but you don't want nobody coming out to your house. But if you register your LLC in your house address, you just included your house as a part of your company now. So
Okay.
now they could take your house if they wanted to. So you could, if you don't have a business address, you can purchase a virtual address online.
Got you. But
Yeah.
that would fall like if you actually own the house, right? Like if you were renting the house.
No, it don't matter. Well, yeah, if you rent the house, yeah, I mean, I guess you could. But
Right.
yeah, if you own the house, you damn sure don't want to put your house address on there.
Gotcha.
Because now they can come after that.
And then you said something about put what you put your LLC in or something like that. You said something. I don't know what the website is. I don't know if it was a bank or something like that.
Nah, you in the bank. So
I think she's talking about like that fast track, like to get started, what he was talking about.
Yeah.
no, you go to Maryland Business Express jump. They just charge you like an extra expedited fee to process all your paperwork.
No, I
Oh, you talking about Duns and Bradstreet?
Yes, yeah, that. Yeah.
All right, so yeah, you want to set up. You can go to DNB. It's just the initials, Duns and Bradstreet, DNB.com. And once you got your business set up, you want to set up an account with them so that they can report you it'd be like the credit report for your business.
Right. Okay. That.
Yeah, that'll be like your credit bureau. They'll be the ones reporting your business and how it ranks on their website. By how your bank account look and all of that. They collect data. That's what all of these companies do. Just like that Mastermind site. They get paid to collect data so that they can, whoever needs that data pays for that data from them. So you want to buy real estate, you pay for that data from Mastermind. If you are in a business of giving out loans or something like that, then you would pay Duns and Bradstreet for that information on these clients that you're looking for.
Yeah, I remember. I think you either did a live or a video.
I did a video on Duns and Bradstreet.
Yeah,
I did a couple months ago. Yeah, because a lot of people who own businesses and don't even know about it. But when they decide they want to buy a lease of property or something, they're gonna ask you for it, and then you're gonna be having to set your account up, and you ain't gonna really have much to report on your report. So you want to have it set up before you actually need it versus when somebody asks you for it. Now you kind of running around trying to get it all together. So just have it in place already. You just setting up your future, just a little bit at a time, a little bit here and a little bit there. It took me years to get to where, you know what I'm saying, I'm established that now, but and a lot of learning and stuff like that. So you know what I'm saying, it's not gonna happen overnight, but you got the information, you got the play. Now you just gotta run the play. It's just like playing basketball or football or any sports. The coach sit down, he draw up the play. Now you just gotta run the play. You know what I'm saying? So y'all got a lot of information. Probably too much information at one time. I be trying to cut it down to like an hour, but if y'all asking questions, I don't want to like stop. You know what I'm saying? I just want to give y'all as much as I can give y'all, build as much value as I can.
Right.
Yeah, I appreciate it. You definitely gave out a lot of gems for sure.
Yeah, same. Because I literally had no idea or know anything about it at all.
Sweet. That's all. I mean, I put this. I don't even really do this for the money. Like I said, I got a store that I'm running, and that's where my income come from. It don't come from me sitting down and doing this, but it brings a different feeling to me when I know I'm able to sit down and do something that a lot of people not gonna do for other folks, which is take 2 or 3 hours out their day and try to explain stuff and make sure people understand it. So it made me feel good just to know that y'all actually grabbing something that y'all didn't know and y'all gonna be able to act upon it and play it out. And then I want y'all, like I said, I want to be like a community We want y'all to be sharing y'all wins with me. Let me know, like, yo, I just got in and bought this and I'm up 100, 300, 400. I want y'all to share that with me so I can, you know what I'm saying, share with other people too.
Right.
Yeah.
All right.
I'm very eager to get into this now.
Yeah, definitely.
For real.
And like I said, it's a lot I shared, so y'all not gonna probably remember everything. So don't hesitate to DM me and be like, yo, I was on the live, got some information I ain't too sure about, and can you help me with it? I might not respond right away, but I will get back to you. All right.
I appreciate it. Thank you.
All right.
Yes. Thank you so much for this.
All right, no problem. Y'all take care.